Alright, let's get into the video real quick. I haven't posted for a while, got a haircut. I'm listening to some random house playlist, so if a song comes on that you don't like, cry about it. My skin is red because I did cosmetics, so cry about it. Let's go. L's on L's on L's, that's all I'm gonna say. L's on L's. Last couple of days have been L's, so I don't post about it because I will explain. So, basically what's been happening is price action was bad, or I mean that's just an excuse. Price action was bad for me because I am a beginner trader, and because I cannot read bad price action or action that is bad for me, so I lost like 4 times. Good thing is I de-risked each time because I knew it was bad price action, except for today. So this is why I'm going to talk about today's trade and not about the past days. So Friday, Monday, Tuesday should not have traded. Price action was bad. I should just not force a trade. I forced a trade, which is not good. But today I think was a good trade, and I will explain to you why, and I'll also explain why why I messed it up, why I didn't win. Why was price action bad for the last couple of days? I think it has to do with the upcoming election. Also, there was like a lack of news, or too much news and so on, so it kind of messes us up. Okay, so let's get into it. What is this? Okay. So, news for today. We had news at 4 and news at 4:30. I ignored the news at 4:30, but I did take on this news at 4. So let's talk about it. Let's remove all these drawings so you guys don't see shit. Oh shit. Okay. So I took my trade on S&P, so I'm not gonna show Nasdaq. Even though I don't know what this is. I think this was an accident. Yeah, this was an accident. Okay. So let's look at our balance first, just so you guys can understand what happened. Like here, you see all this? This has all basically been bullshit. This one doesn't actually count. This one, 1,200. This was a mistake. Click. And I lost 1.2k in like 5 seconds. This is stupid. But still, you know, all these losses are avoidable. This loss avoidable, this avoidable. All this could have been avoidable. This one, I probably would take this trade again, but all these trades would not take them again. So let's talk about this one. So going into market open, let's look at the daily bias. Wait, is the music too loud? Nah, I think it's high. No, I'll put it a bit lower. Alright, let's go. So daily bias, we're in an uptrend, in a bullish uptrend. When this candle closes, will actually be a downtrend. So, but this is of today. So prior to today, we were still in an uptrend. 4 hour, we were actually in a downtrend. It was like a very bad downtrend though, because the break of structure happened all the way back here, and there was no more break of structure here and so on. So this was like a bad downtrend, so I didn't really care if I was going to trade to the upside or to the downside. I would take both. So going into market open, we had a high here at 4 hour high, and we had a 4 hour low right here. We also had like a fair value gap, I'm pretty sure, somewhere. I don't know where. There was also this high right here, this 1 hour high, but there were no other 1 hour lows. There was a small fair value gap here, but this is tiny, and price was already closed below this fair value gap prior to the market open, so I didn't do anything about it. So then let's go into market open. So market opens and we get the most, like this would be perfect for Bennett if he traded 1 minute. If you know what I'm talking about, you know what I'm talking about. Support and resistance. We're playing the My boy calls it accordion pattern. Accordion pattern, bro. It just goes up and down, up and down. This is the worst thing you can get at the beginning. Now, I wasn't too mad because I was just waiting for news to come out anyway at 4, which it did at 4 right here. And as you can see, right after news came out, price started being normal. Basically, right after news came out, this candle is when news came out, price started being normal. We instantly draw out this liquidity, and if we go to the 5 minute, you can see that we hit this liquidity, then we got a leg up with this green candle. So after this green candle and this liquidity sweep, I instantly went down to the 1 minute and started looking for entries. So we got the break of structure on this candle, as you can see, on this candle right here. Well, actually it's down here, sorry. On this candle right here, we got the break of structure. Then I waited for a leg down or continuation confluence, so I got the fair value gap right here, which we did hit. Now, this fair value gap, you can continue it down to here because that's actually what it is. When I set out my stop losses and stuff, one sec, guys. Alright, guys, I'm back. Took a little break, took a little dinner, so the time changed, but let's get into it. Let's see if I remember where we were at. Alright, yeah, I was about to put this down, right? Alright, so... Alright, let's get into it, So I entered off this fair value gap, as I was saying, right around here, with this green candle close, because we got the reaction of the fair value gap. I set my stop loss down here, which is pretty generous. I could do it just under this fair value gap, like here. Let's delete this line. Just under this fair value gap. But I didn't. I did it all the way down here. Why? Because price action bad, so I was taking like less risk. I still risked my full amount though. Actually a little bit more. But this is due to slippage. I'll explain that later. Yeah. But okay, so where did I set my take profits? So I need a minimum of 1.17. So I was looking for places to take profits. I mean, normally I would go for 1 hour draws on liquidity, but this was way too high from this spot. And this was also too high. I mean, I didn't mark out this high yet. I forgot about that. So instead, I started looking for like other things that I could take my stuff off, which was this fair value gap right here. Yeah, this fair value gap. Right here, this fair value gap. Wait, no, wait, this 15-minute fair value gap, yeah. So I took this was my stop loss right here. Let's see, actually, I didn't really check standard deviation. Why? Because I don't know, because I just didn't feel like it, I guess. But let's check standard deviation real quick. What? How do we measure the standard deviation? Either like this, or you could do it like this. Yeah, like this is better. Yeah, because it's the 5 minute, okay. So as you can see, this fair value gap matches perfectly with our standard deviation. So I set my, but I mean I didn't know that, but I still set my stop, my take profit around here. We got edge maxed, as someone else says. We basically were floating in how much profit? Like 1K, and then boom, we got stopped out. Yeah. Why did that happen? Well, I didn't take like, I could have set my first take profit like here somewhere, which I didn't do because there's definitely liquidity here. I mean, this was consolidation, this whole block, so it makes sense why I kind of reversed out of there, but I didn't do that because my RR, as you can see, is 0.92, which is very low. So I would never take my first profit there. What I could have done is also set my stop loss a bit lower, or higher, sorry, in this case. And that way, yes, maybe I would have taken some take profit here. but that was just too much risk. So kind of the fact that I did a less risky thing made me lose in a way, if you know what I'm saying. Okay, so yeah, I lost this trade. I lost, as you can see, 1.2 thousand. The reason why it's 1.2 thousand and not like 1.12 thousand, which it should be, is because of something called slippage. Now I'll probably make a video in my concepts at some point, but basically the price moved too fast that this order could not get filled at the right amount. So my order scrambled, you could say, to fill some order, to find a seller. Wait. To find a buyer, and because everybody was selling in this move, right? And it scrambled to find a buyer. It found a buyer, but at a worse price. That's basically the concept. Because there's no buyers in this sort of scenario, so the price jumps, and it's not as smooth. As you can see, there's jumps between here and here, and here and here, and here and here. Yeah. But other than that, I have nothing else to say. I could say this is just bad price action. I could say that I entered too late, because I entered at 16:31, and generally I want to enter at, like, my cutoff point is 16:30, so I entered 1 minute after my cutoff point. Is this an L? I mean, not really. I think I would have still taken this trade. Should I have, like I can blame this on price action, but I would, if I saw this again, I would take this trade again. You know what I'm saying? Like, I don't think it's a bad trade. I just think that, I guess there were just other things at play that I didn't see. I don't really know how I would improve. Yes, I could improve by doing this, which I talked about already, and setting my stop loss here, my take profit here. But even then, I would probably set my take profit still, like, yeah, okay, maybe I would set it here. I don't know. It's just like, it's easy to say in hindsight, but looking at it now, looking at it then, I probably would not have done this. Probably should have just stayed out of the market today, I guess. Another thing that I could have seen coming, as you can see, as I said before, there was already a downtrend prior to this big red candle right here. This is already a downtrend due to the break of structure right here. There's a break of structure, there's no break back to the upside, no break back to the upside. This candle failed that. No break back to the upside, so it's still in a downtrend all the way from this candle to this candle. This is all a downtrend. Even though you have these four green candles, this is still a downtrend, all this. So, yeah, I guess I could have seen that. I mean, would I take this trade again? Yes, I would. The 1 hour was in a downtrend. Would I take this trade again? Yes, I would. Like, you know what I'm saying? Oh yeah, one more thing that I missed to talk about, I remember now. There was actually also an S&T divergence. That's another confluence. So, basically, S&P swept these lows. Lower low, low, lower low. Nasdaq did not sweep these lows. Lower low, higher low, or higher low here as well. So that's also a sort of an indication. And there was a short period of bullish momentum, but not as much as we wanted. And that's why I did not win today, even though I was in profit for a while and I could have cashed out. I still got stopped out in the end, so still lost. You know, I gotta be more mindful about which days I trade and which days I don't. And I think the past days I forced trades too much. Today was not really a forced trade. I think this was a good trade. I would take it again. But yeah, L's on L's. I've been down. Let's see how much I lost. Lost, let's say, what's the day? 23rd. Lost since the 14th. How much have I lost since the 14th? Because, yeah. So I've lost. Oh no, my peak was here. This is my peak. I've lost all this money, excluding this one. This one doesn't count. But I've lost around 2.8k, because this one doesn't count. With this one, it's around 4k, but it's actually 2.8 because, yeah, this was an accident. But I lost 2.8k. Let me just write this thing in my Notion, in my trading journal. Oh, I'm not logged in. Ah, never mind. I'll do it later. Alright, peace out, guys. I'm gonna post this. Oh shit, this is my other video. I have to stitch it together with the other one because instead of pausing this, I actually, as you can see, there's like a button to pause right here. I didn't pause it. I stopped, so now I have to put the two videos together. It's annoying, but yeah, chill. Yo, I got my timer. I have to go to laundry, so bye, guys.